For example, if you go to a DeFi bank and you're taking a 30-year mortgage, it's being quoted hopefully off of one of the on-chain IPOR rates. It's being hedged with these long duration instruments, and it's invisible. It's a single smart contract call for you, right? The other place it will be is in other integrations. It'll be in different vault strategies, for delta neutral strategies. It will be in different, simple fixed income strategies for DAOs. It will be, these, even short-term fixed rate borrows. So, it can be, as we mentioned, like these building blocks, these DeFi primitives can be part of multi-contract calls to create different structured products.
Welcome to Mission DeFi with Brad Nickel, where we explore projects in decentralized finance that are innovating and driving our mission of financial freedom forward. Thank you for listening. If you like what you hear, please subscribe, rate, and review Mission DeFi and spread the word by posting a tweet to the show. All opinions expressed by Brad Nickel or his guests are their opinions and do not reflect the opinions of Black Knox, Material Indicators, or any other affiliated organizations. You should not treat any opinion expressed by Brad Nickel or his guests as an inducement to make a particular investment, follow a particular strategy, or become involved with any project. A project being featured on the show is not an endorsement of that project in any way. This podcast is for informational purposes only. Now, here's Mission DeFi with Brad Nickel.
All right, I'm excited today to have Darren Camas from IPOR Labs. He's the co-founder and CEO of IPOR Labs, IPOR Protocol. And it sounds like they're doing some really innovative things in the DeFi world. And so I'm really looking forward to diving into what they're doing. Darren, welcome to the show. Thank you for joining me. And please, if you could introduce yourself and tell a little bit about your background and how you ended up in this world. And we were talking a little bit about your world travels as well. So I think that'd be really cool for people to hear about as well. I think that kind of reflects on what you're doing.
Yeah, well, thanks for having me on, Brad. It's a pleasure to be here. So as you mentioned, my name is Darren Camas. IPOR Protocol is the, where I focus on the bulk of my energy. You mentioned some world travels, and actually most of these world travels are connected to market cycles and to crypto. So I'm originally from the US. I grew up in Colorado in a ski town. I ended up leaving that just shortly after the financial crisis. And I made my way to Chile just because I had some friends there. North American winter is South American summer. So you have a lot of, kind of back and forth. So I met some friends, made my way down to Chile. And in Chile, I actually met a group of expats, who started up one of the world's first Bitcoin exchanges. This was in 2011. And I guess the rest is history. I've been involved in the space since 2011 on the exchange side, on the payment side. In 2015, I left.
Sorry, real quickly, were you so you were working on that exchange project at the time?
Yeah, that's right. It was called TradeHill. So TradeHill was formerly the world's #2 exchange by trading volume, and we were #2 to Intigox. So that's a little piece of history.
Nice, very nice. What kind of was your professional role in that enterprise? Were you development? Were you marketing? What product? What kind of role have you played in these spaces at the beginning?
So I led business development, and I actually managed a lot of the high volume accounts. Created different structure strategies, ways of retaining users. And
Nice.
So actually a lot of it was like, let's say, operational risk, trial by fire. Yeah, at that time, we couldn't raise a VC round. There were no VCs actually active. A little unknown startup, got the first VC check about 3 months after we shut down the first one, and that was Coinbase. So, you have some opportunity cost there, but, it was a lot of actually trying to figure out how to set up bank accounts, how to cover the compliance, and also, just running an exchange, right?
Yeah,
so
of course.
It was a crazy time, trying to explain, to banks how to set up to set up an account for a Bitcoin exchange when no one knew what Bitcoin was. We got thrown out of a lot of meetings, being called scammer, Ponzi scheme, all of these things. And if you think that getting a bank account as a crypto company is difficult now, you can imagine 11
Can it?
years ago.
Yeah,
So yeah.
that's brutal. Were you even able to get account?
Yeah, I mean, we had some accounts. We probably had I don't know how many accounts closed. We got screwed over by a payment processor. All kinds of crazy things. But always made the customers whole. So this is, let's say, kind of a divergence from the MT Gox story. But
Sure.
unfortunately, being too early is not necessarily a great thing. And
Yeah,
maybe being
yeah.
too early in a lot of things. So in 2013, we also ran a brokerage, largest brokerage out of Latin America. And
Wow.
we actually flipped to kind of one of the first 2.0 projects that we didn't end up taking to market. And this was a little bit about, let's say, the failure of Gox. So myself, actually, it was led by my business partner at the time, Adam Stradling. We were working with a PhD cryptographer, Felipe Camacho, and we were working on a project called Provably Solvent, which was setting the the foundation for on-chain auditing of
Ah,
essentially crypto exchange balances. And this is a
right,
science that is very well developed now. And again, it's in the limelight. Let's say this is 8 years later, and
right,
unfortunately still an issue. But this was like looking at using some sort of privacy preserving proofs. At that time, we were looking at commits, to essentially, you can prove that the contents of the box are the same without revealing the contents. Taking a statistically significant enough sampling of the the balances, finding some way, at the time we we're looking at like audit coin to reward the users for opening up their balances or revealing something about themselves, so that you can actually focus on consumer protection. In the end, we actually had a couple of different projects going, but we had to shut down. Some of the business partners had some family issues, so we had disbanded the team. And then I got up a project that moved me to China. So I left Chile for
wow.
China to start a cross-border payment company. It was well recognized. So it was recognized as the top seed stage startup in Latin America, called BitNexo, basically using the Bitcoin network to clear cross-border payments. Unfortunately,
Nice.
payments are high regulatory risk and very low margin. So
Yeah.
ended up pulling the plug on that. I was an advisor to Cardano. That was 2017, 2018. I've done some work in the security token space, and then finally, here at IPOR.
Wow. That's certainly a rich background in the space, man. That's from early Trailblazer days to some some uh, some projects that obviously were needed but were ahead of their time, and that's always frustrating. I did that in the SaaS space in the 90s, so I know what that feels like, kind of swimming against the current. But that's great. Gave you great knowledge and learning for the process that you're going through
Exactly.
now, I guess.
Exactly.
Exactly.
And great
Of course.
network too. So actually, it's a very easy kind of anniversary to remember. So my co-founder and I, my co-founder Dimitar Dinev, uh, we had actually talked a lot about IPOR and really what we wanted to build. He comes from a VC background, also has built a couple of exchanges. He was working in mainland China with some of the top exchanges there, and one of the VCs that was a big investor in Binance. And he was actually, coming from my long background, he was actually my DeFi guru. So we
Nice.
were talking a lot, towards the end of DeFi summer, kind of what the space needs. So we were looking at like, okay, so getting rug pulled, going for the high APY, seeing how the mechanisms work, and saying there's a lot of things here. Let's boil down to the fundamentals. There's actually strong fundamentals on the DEX side and the lending side, right?
Right.
DEX side, you have some traded volume, you have an exchange fee, and it's fairly easy to do a calculation of, let's say, revenue generation. And on the credit market side, borrower pays lender, right? Not
Right.
rocket science, very simple to go, and everything else on top of that
Core
is most
components of the financial system. Yeah.
exactly. So, you know, if you split the TVL nearly almost 50-50 down the middle between those, a lot of people are going to go crazy about, you know, kind of the exotics. Everyone wants to build perpetual futures. And, you know, now we see like the rise of DYDX and now GMX. And then, you know, but who's looking at the credit market side? And for me, this was the greenfields opportunity. It's the most interesting, the most useful. Actually, these interest rate derivatives markets are one of the largest markets in the world. They're what our head of product calls the largest market that you've never heard of, $450 trillion notional value. They underpin
Incredible.
all global debt, but you know, everyone in crypto wants to trade exotic derivatives, which are a small slice of the pie in TradFi. So we
Right.
really looked at this as the kind of the cornerstone and the foundation of the DeFi credit markets. And so this was also like a year before, you know, the eventual unwinding of the LIBOR, and looking at, okay, so what are kind of what are the major things? What are the major structures? One is a transparent benchmark rate, and we can take some of the issues with the LIBOR, such as, you know, self-reporting and potential manipulation by actors inside banks, and replace it with basically transparent smart contract calls, and we can get as close to real time as possible. And then on the other side, designing these interest rate derivative mechanisms, which underpin global debt. They allow for things like, you know, fixed rate borrowing or fixed income. They allow investors to hedge their rate risk, and they enable things like a 30-year fixed mortgage. So if we can
Let's
build these kind of core infrastructure pieces, then, you know, this will be the base of the DeFi credit market for years to come.
as the kind of product that most people have never heard of, why don't we start kind of what that market is, right? And why it's so important, and why it's so heavily why the volume is so heavy in that market, and then bring people into kind of the nuts and bolts of what you're trying to build around it, if you don't mind.
Yeah, so we're looking at like credit markets in general, right? And this debt has, you know, every time you take debt, you pay interest, right?
Sure.
So this is the base, right? So that's a core principle. The other side that we know, actually, most crypto native people should know, is that they're looking at central bank rates, right? So central
Right.
bank rates are really the trigger, right? It's opening up the monetary supply to the rest of the world. And then you can think of these interbank rates as kind of a premium on the central bank rate, because these are the rates that banks can lend to one another for, and they also are a base for instruments that the general public, you know, interacts with. So you
Sure.
might get a, let's say, a mortgage, and you can take a variable or a fixed rate, right? And you know, like, let's take 2 years ago when capital was basically free, and you know, this is
Right.
when Ray Dalio was saying cash is trash, which is no longer the case, but you know, maybe we have this inversion come along again. And the
Right.
rates are low, right? Why? Because you want this kind of monetary expansion, and you know, with cheap money, you get, you know, it's this inflation that we're dealing with right now. You also get you know, an inflation of the asset prices, because you know, the capital has to flow somewhere.
Sure.
But now fast forward 2 years later, and you know, with the central bank rates rising, the interbank rates rising, if you have variable interest rate, then now your debt cost is skyrocketing, right? So, you know, let's say you took a variable rate at a very low rate, but now you're pegged, you know, like 5-6%. Well, your debt cost has increased 2-3x, right? And so, you know,
Yeah.
like, let's look at US, where most people live, you know, paycheck to paycheck. You know, if that's, you know, let's say you budgeted for 40% of your paycheck, but now it becomes 80% of your paycheck, you know, what are you going to do? Let's say it
Right.
actually outpaces your ability to repay, right? I mean, this is problematic. So what does a bank do? You know, they go to the market, they secure the loan, they could secure the capital, and they take something called an interest rate derivative, something that matches the duration, you know, of that instrument, and it's essentially a hedge, right? If you long
Right.
interest rates, you protect yourself against the rate rising, right? So if the rate
Right.
rises, as a borrower, you have to pay more, but you earn more. You earn from the derivative, and it essentially balances that cost, right?
Right.
So this interest rate derivative market is enabling kind of these, you know, fixed rate mortgage for 30 years. or depending, the duration depending on where you are.
Sure.
And so this is like one of the factors, but you get other things like carry trade, and we might know carry trade from, this was it's fairly well known, but this was kind of a very a popular strategy, be like 3 arrows, right? Where you're taking interest, you're getting something at cheap interest and you're lending it at a higher interest, and the
Right.
mother carry trade was the was the Terra 20% rate, right?
Exactly.
So you can have like a fixed for fixed or fixed for floating exposure. You can trade between 2 different rates to try to arbitrage the difference between these rates as well. So there's a lot of different strategies you can take with interest rates. The interest rate derivatives notional value is 450 trillion, which is multiples of the global debt, right? So
Right.
if you were just hedging, they would be roughly equal. But obviously there's speculation and arbitrage cases baked into there, right? So the derivatives market is typically larger than the spot market, and that's just how it works, right? So people
Right.
are using
Yeah.
it to hedge, to speculate, to arbitrage.
Right. That makes sense totally. And so the idea behind IPOR protocol is to bring this on chain, right? And to make it, as you said earlier, more real time, um, immutable, whatever, but allow this to kind of automate away the human processes involved in this.
Yeah, I mean, you think of them as building blocks, right? So, okay, so let's imagine, okay, so we described the interest rate derivatives that are on chain right now as the first instrument that references the IPOR, right? So the
Okay.
IPOR, the inter-protocol overblock rate, which is the on-chain benchmark rate, is the core of the protocol.
Right.
And it's not sexy. It's just an interest rate that's printed to chain. But
Right.
if we think about it, you can call that contract, which is an immutable chain of rates over time, and now it has about 5 months of history being printed onto the Ethereum mainnet. And let's imagine you're an external protocol builder, and you want to structure your debt instrument, and you want to peg it to the IPOR DAI rate, right? Because you're going on using, DeFi native instruments. Well, you can
Right.
reference and call to that contract, which is immutable. It's printed on chain. It's free. It's a public good, and you can structure your debt instrument. You can call the IPOR DAI
Nice.
rate. You can add 2%. You can call the IPOR DAI rate, add 1%, call it a fixed rate, and take fixed for floating exposure, and then you have a fixed
Nice.
rate contract. So these are building blocks. So we consider that the IPOR protocol is actually the collection of different DeFi primitives, right? So
Right.
the most important in my mind is the IPOR index, right? Or the benchmark rate. And this represents
Okay.
the cost of capital for different assets. On the other side, you have the interest rate derivatives. There will be multiple ones. And one of the DeFi primitives that we've pioneered specifically is an AMM for interest rates. So we built a bespoke model. We have quants on the team with 20 plus years as quants in traditional finance. And we're actually taking from a toolbox in TradFi and adapting it to blockchain, right? And
Nice.
then the other
Nice.
side, we just actually announced, and something that will be live very soon, are power tokens. And that's some of the tokenomics behind the DEX. But, that's, let's say, a separate kind of public good, that we've released.
Yeah, yeah, it makes total sense. So, it sounds like, from the perspective of your kind of go-to-market, there's a UI and a user interface for people to participate in IPOR, but your primary target are other protocols utilizing the platform and its composability to integrate it with their platforms, and provide what you guys provide, so without having to build or figure out it on their own.
Yeah, I would say that, at the beginning, we expect that a lot of people would interact with the protocol through the app, right?
Right.
app.ipor.io, right? So this is something where you can actually interact directly with the smart contracts. You can essentially go long or short versus the interest rate. You can become a liquidity provider. You can perform liquidity mining. You can also very soon participate in the DAO governance. This is one of the major work streams for 2023.
Right.
But let's take a step a year down the road, 5 years down the road, 10 years down the road. We expect that IPOR will be as invisible as, let's say, the LIBOR was to the hundreds of trillions of dollars in deals that it underpinned, right? So
Nice.
for example, if you go to a DeFi bank and you're taking a 30-year mortgage, it's being quoted hopefully off of one of the on-chain IPOR rates. It's being hedged with these long duration instruments, and it's an invisible, it's a single smart contract call for you, right? The other place it will be is in other integrations. It'll be in different vault strategies, for delta neutral strategies. It will be in different, simple fixed income strategies. For DAOs, it will be, these, even short-term fixed rate borrows. So, it can be, as we mentioned, like these building blocks, these DeFi primitives can be part of multi-contract calls to create different structured products. So
Love
very
that.
much at the beginning, maybe a lot of people will interact with an interface, but the contracts will probably be integrated into a lot of different applications for creating different financial products and protocols, without ever having to deal with, the IPOR, the IO interface.
Yeah, that makes total sense. And I love that model. I love the model of the targeting protocols from a B2B perspective and or P2P perspective, and utilizing composability to really grow what you're doing, as opposed to constantly having to do a front end retail play there. In your approach to this, are you guys? How long has it been? How long have you been up with what you have right now, currently?
Yeah,
The
this goes back, I guess,
platform.
to the the birth. I wrote the first words of the white paper on New Year's Eve 2020. So
Wow.
it's
Okay.
just a little over 2 years now that we've been talking about it. We started the company IPOR Labs in June of 2021. So it's been about a year and a half with a lot of the guys working on full time. We're up to about 17 team members right now. We just
Wow.
welcomed on, one of our kind of last missing pieces, which are head of institutional BD, comes from 15 years in financial markets. We
Nice.
have 8 engineers coming from, let's call them, they're definitely shadowy super coders. They embrace it, coming from actually enterprise software development turned blockchain. And that's been huge, thinking about security, scalability, and robust code. And then we have, 3 people on the quant team, 2 with over 20 years, in financial markets as quants in fixed income. And so we have a really well-rounded team. And then, my co-founder, on the derivative side, on the financial market side, also on the VC side, and his actually bread and butter is tokenomics.
Nice.
So we've been on mainnet since mid-August.
Okay. Oh yeah,
And now,
it's new.
I guess when it's released, this will be 5 months. There is this retroactive rewards that have been announced. And that goes into the next phase, which is DAO control, right? You
Right.
distribute tokens to protocol users so that they can start actually acting within the protocol, right? They may be actors such as liquidity providers or traders or community participants. And this goes in line with the IPOR manifesto. So the IPOR manifesto, you can find it on the website, but it's that this protocol is designed to be adaptable and modular, and it grows with the DeFi ecosystem. So it's essentially long DeFi credit markets. It's not on Ethereum because Ethereum is the thing that will be here forever. It's on Ethereum because that's where the most liquid DeFi credit markets are. And for
Sure.
example, if we were to go cross-chain, this will be a community governed decision. Right now, it ingests rates from Aave and Compound, both V2. Will it ingest rates from V3? That will be a community decision. Will it ingest rates from other protocols? That will be a community-led decision. So we're actually
Nice.
transitioning now into this DAO phase, where the DAO participants will be able to start voting on and having governance decision over how this protocol adapts. And so this is
That's
this is
fantastic.
really exciting. In, let's say, just a little over 2 years from concept and under 2 years actually working on it full time. To transition into this phase is quite cool. So we've seen
That's
about
awesome.
1.5 billion in open interest on the notional side. Uh,
Wow.
I can't remember. I think around 500 unique LPs, 250. I can't remember the exact number. On the trading side, something like 16K in Discord, 10K in Twitter. So we have a large and growing community, but we hope that this will continually grow.
That's awesome, man. That's fantastic. And we often talk in this space about kind of the bridge from DeFi to TradFi, and there's a there's a component to this that makes it really incredibly difficult for us, right? TradFi can just jump in and speculate and trade and do the things they're doing, but people that are in these interest rate markets, these credit markets, in the TradFi world, moving into this world is probably a little more difficult for them to get their heads around, and a little more difficult from a transference of value or funds perspective. How are you guys? I know you just hired, you have an institutional BD person coming in. How are
Mhm.
you guys approaching this? Because it's like this. Well, why don't you come over here and dabble a little bit? Or is it, what, we're just going to go for the funds, that the people that are doing this, that already kind of play in crypto, and we're just going to be the connector into their institutional systems. I guess I'm just asking, what are your thoughts about how you guys bridge this
Well,
into the TradFi money?
yeah, I definitely understand the question. And I actually think, IPOR is the perfect bridge because it's let's say it's the lowest level, right? These
Right.
these debt markets are some of the largest in the world. The largest market in the world is Forex, right? They're all cash-based markets, this fixed income world, right? And
Sure.
then, in crypto, what are we attacking? Are we attacking equities? Are we attacking commodities? And again, these very well traded exotic derivatives are such a small subset of TradFi. But let's look at fixed income, right? And this is really what's disrupting the market. The fixed income dynamic. You're getting such a high yield on your capital in the form of dollar and T-bills and other debt instruments. This is why we're in a risk-off scenario, right?
Right.
So fixed income is really, what I believe will be the conduit to the next bull market. And actually, I was sitting at a panel. I was watching the panel at Digital Asset Summit in London, and some of the top participants there. I think you had Max Boonen, B2C2, the Fabric Ventures VC, and a couple other guys, and they were all talking about fixed income will spark off the next bull run. Part of
Really
that is
interesting. That's
tokenization of real world assets, of different assets, like getting different structured products, like mortgage-backed securities on chain. But the other
sure.
part is the native DeFi fixed income, right? So right now, maybe the dynamic doesn't make so much sense. Why? Because who is going to leave, let's say, a treasury bonds, for DeFi, right? You get half the return right now. You get all of the smart contract risk, and it doesn't make sense. But there is this
Sure.
trapped capital inside of DeFi that's just getting this like subpar yielding. But this is also, let's say, 2022 and 20 scenario, right? 2021, you had the DeFi yields, which are hovering, maybe 8-10%, and in the traditional finance, you can get sub 1, right? So we expect that actually, let's say, if this inflation situation gets under control, or the central banks turn back on the money printer, that we'll see this dynamic turn around again, right? So we'll see this yield inversion. So actually, fixed income should be a two-way conduit into DeFi and out of DeFi, and this should be where the smart capital flows. And IPOR is just a tool for TradFi to understand what's the cost of capital in DeFi, one, with the IPOR indexes, and then two, to manage their rate risk, right? So it actually adds stability and predictability to their different debt instruments if they want to use them on chain. So we're actually providing all of the, kind of different, let's call them DeFi primitives, but they're really tools that traditional fixed income players use to manage their risk in traditional markets. The big
Nice.
caveat is we have no semblance of a yield curve in DeFi, and that's one thing that we really want to tackle, and that's actually building out, not only the rate curve, getting these IPOR rates to 1 month, 2 month, 3 month, 6 month rates, but also providing instruments that offer longer duration instruments. So this is a big hurdle that we have to cross in DeFi in general, but that the IPOR instruments can actually enable.
That's awesome. That's really good. So I really can see the idea of. I definitely understand the two-way conduit there, and I think that makes a ton of sense. Obviously, you guys have a lot of work to do on the biz dev side across the board, but that's, I often say that marketing and DeFi is not marketing; it's primarily biz dev and leveraging other
And,
communities
and
or other protocols.
and education, like the IPOR name, in DeFi and in crypto, it's very easy to meme it. IPOR, you pour, we all pour. But if you
That's
take it
right.
in the TradFi sense, people like the TradFi people hear IPOR, they're like, oh, LIBOR for DeFi, right? It's a
Yeah,
benchmark
yeah,
rate. So these are actually going to be the kind of the core users, because
sure.
this represents the largest capital pools, right? So to have that kind of very easy, let's say, kind of brand recognition is very powerful. And so this is a long-term play. So IPOR is not an easy protocol.
Right.
At this point in my career, I'm not interested in doing something very small, make a quick buck, turn around. No, we actually want this to be at the base of the DeFi credit markets for years to come. 5-10 years
That,
down the road, again,
yeah,
you're calling this debt instrument as pegged to the IPOR, and it's using these instruments, right? So we have this long tail play where we want to cement the IPOR as the benchmark, the risk-free rate in DeFi into traditional finance players, because they're talking about it right now. They'll
yeah,
hear about it. Maybe the guys, as individuals, guys and girls, in TradFi will use it from their own personal. And then, years down the road, they'll start toe dipping, right?
yeah,
So that's
exactly.
one. But then you have DeFi native firms, or even like DAOs that are sitting on a lot of stablecoin, that are looking to get more predictable returns on their capital, that actually need these tools right now. So there's two sides of the BD play. One is educating users that are not sophisticated to either use these simply or build multi-contract calls to enable them to manage their rate risk.
Right.
And then have the long-term cementing of the IPOR rates, gather, let's say, this long data history on Ethereum from the Oracle, the IPOR Index Oracle smart contract, and also cement this in the minds of different participants who will be market participants, not this year, but maybe 2-3 years down the road.
Yeah, makes sense. I like your long-term vision, long time horizons there. That's fantastic. I think one of the things that's most compelling to me about this is, which is one of the primary reasons I love DeFi so much, is composability, is the ability for both sides of that equation that we're calling both sides now. Obviously, your vision is there is no longer both sides eventually, but their ability to create their own products around this, right? I mean, that to me, I think is it's funny. I tell this story. I have a neighbor, community friend, who's been in TradFi for 25, 30 years. And over a year ago, he was asking me about what I was doing and what I was involved in. And he said, I don't understand what's so compelling about DeFi, blah, blah, blah. And I said, well, look, you've been in this industry for all this time, and everything you do, everything you build, everything you create, um, is either has to be approved by someone or actually created or built by someone at the bank. And it probably takes forever for any of that to happen. I said, this is a world where if you have somebody with the skills available to build something, you can build any product you want, and you can base it on protocols that already exist, so that you can actually turn something around that's a sophisticated financial instrument and have your own product in the market, without any permissions. And that's when it kind of clicked for him that, oh, holy crap, that's why you like this space. And I think that's going to be a really compelling thing, uh, in the TradFi side, and obviously for protocols, is this ability to leverage what you guys are building into all kinds of products, and giving them the power to do that, makes a ton of sense. So I love that model.
Yeah, well, I mean, one thing that you said there, like, for example, interest rate derivatives are not accessible to the average person. It's rarely
Right.
accessible depending on the size, from an institutional. It's normally bank to bank, and you have financial institution to financial institution that's swapping these fixed for floating or floating for fixed exposure, right? And that
Right.
means that you, as a consumer, are always getting value extracted. Not necessarily value extracted, but you always pay the premium, right? Because
Yeah.
they'll secure the loan, they'll hedge the rate risk, and then they'll offer it as a premium. When, if you could do it yourself, maybe you would. And one of the things
Right.
that actually made this market possible is that in the construction of the interest rate derivatives dexes, or the interest rate swaps dexes, it's a peer-to-pool model. So it's actually two sides of the market. So, the pool is a passive liquidity provider that's underwriting these derivatives. There's an AMM, again, that bespoke AMM that I mentioned, that's pricing them, and then you have essentially the contract taker. So this
Right.
is maybe one of the first times that interest rate derivatives are accessible for someone to use it to hedge their own rate risk, rather than only
Love it.
be able to consume a product. Of course, there's
Yeah.
upsides and downsides to that. There's a lot of education gap, but I mean, it's this is part of the ethos of the free markets, of the DeFi markets.
Yeah, absolutely. Well, look, I mean, every day we see people who a year or 2 years ago had zero clue about any sophisticated financial instruments, who are now, neck deep in this world, doing things they never imagined or never understood before. So I don't think that's a stretch. And I think also that there will be opportunities for others to build more customer friendly things that still empower people take advantage of some of what we're talking about here. So I think that makes a ton of sense.
Exactly. So really quickly, over a long time in crypto, it's very difficult explaining it.
Sure.
And some of the times, actually, you don't want to, and you shouldn't. Like if you go
Yeah.
to a car dealership, the car dealer never sells you. They're like, okay, this exhaust manifold is blah blah blah. This is the alloy actually on the kick plate, or the splash plate. This is the this is the carbon on the infrastructure. They're selling you like what you want, right? Does it go fast?
Right.
Does it get? Can I find it in red? What's the fuel efficiency, right?
Right.
And oftentimes we get stuck in crypto, in DeFi, so caught up in explaining the thing and the mechanics, and even tripping over it, because it's very difficult to understand all these things, and it's not necessary. You say, okay, you want a fixed rate? Okay, take a fixed rate from protocol blah blah blah, which will exist in the future, right? And that
Right.
this IPOR index and the IPOR interest rate derivatives that underpin it, who cares? As long as they work, right? This is the whole point.
Exactly. Exactly.
And this is the future goal, right? It
Yeah.
becomes
No, I love that.
selling the car or the house or the home loan without understanding what the piping is, what the infrastructure is.
That's beautiful. No, that's fantastic. I really love what you guys are doing. Um, It sounds like, though, as well, now that you're kind of moving into the DAO phase for you guys in terms of your governance, and you're thinking a lot about how you structure the tokenomics of this. It sounds like there's also an opportunity for, prior to a lot of things getting built around IPOR, for traders, retail people to get involved with IPOR. Can you kind of talk to us about where you're headed with that, what people can do today, what they'll be able to do in the future? And you've also taken some unique spins on some tokenomics here that I'd love to talk about as well, that you're just putting out recently. So
Yeah, sure. So first of all, there's this kind of retroactive airdrop, and that was for protocol users who are either liquidity providers or traders, and that
okay.
interact with the on-chain protocol. But actually, the thing that we're most excited about is there's actually a large community allocation. So in the IPOR Discord, people have had the chance to use a program called Crew 3 to level up. And what does the leveling up process do? It actually gives them knowledge. It's like, take a swap, provide liquidity, or let's say, create a meme or write a big brain post about IPOR. And the whole point of this is that you self-educate. You see
Right.
how the instrument works, or you have to dig into the docs to write a blog post, and all of these things that are focused on essentially leveling up people's knowledge about this. And the community side is a very large size of the airdrop. And this is really nice because a lot of these DeFi protocols favor large protocol users. Well, let's call them whales, right?
Sure.
And that's good, that's bad, whatever, right?
Right.
On the other protocol side, everyone starts from somewhere, and people that are really interested in working on this, maybe they don't need to have any capital at all, but they can go in and, let's say, write a big brain post. And I think that was getting up to a level of one of the rewards levels. And it's all about self-education. So you can have people that are very active in the governance, that are very, like well-known community members that can actually start to have a say.
Nice.
Now, if we pair that with tokens, right? Tokens, what they do is they unlock, the ability to have governance on the protocol, and they are also
Right.
used as boost multipliers. So in December, we announced power tokens, and power tokens were designed by my co-founder, Dimitar, and they were implemented by one of our smart contract engineers that we call Dr. Evil. And so this came out, and it's
Good name.
really kind of an interesting take. So what it does is it makes the whole system modular, right? So the way that we've adapted it specifically for IPOR is, for example, there's a rewards module, and let's say this is based on something like Curve or Badger DAO, where you have this kind of multiplier on your rewards. But there's
Right.
this more kind of fair market dynamic, and there's not this time locking, right? And anything that can be done on chain is done on chain. So in brief, the liquidity that you provide and the ratio of IPOR tokens, or sorry, not IPOR tokens, but power tokens, which are staked IPOR tokens that you stake, they have some multiplier, right? This multiplier goes into infinity. However, it's built on a log curve. So you can think of it like Bitcoin mining rewards. The further you go down, let's say to the right on the multiplier, the less optimal it is, right? So you'll have this very quick, you'll have a very easy time getting your first multiplier, but then the multiplier, it has this kind of diminishing effect. So there's a kind of fair market dynamic where at some point towards the middle of the curve, where it makes more sense to provide liquidity or to acquire more tokens to find your optimized boost, right? So again, you can boost into infinity, but you have kind of this decay on the rewards. So that's something that's more fair market dynamics, and that token, it doesn't have this like 4-year lock like in the case of Curve. It's a 14-day unstaking period. So something that can be relatively quick to adapt to the market dynamics, and you give users the ability, both large and small, because it's ratio based, to find their optimal boost. So it doesn't matter, whether you're a whale or you're a much smaller player. The much smaller players, you just have to find the optimal size on the curve. So it's not really, it's not size based.
Right.
So that's one thing that's pretty interesting on the tokenomics side. And then the other side.
Creates sorry, let me real quickly. It almost creates kind of like a gamification mechanism for folks who not necessarily whales, but they want to participate, and if they optimize on that range, then they're going to be in good shape for earning. It sounds like.
Let's say you're Brad the Whale and I'm Darren the Minnow, and you have this perfectly optimized boost, and I don't. I can find enough power tokens to match your boost because it's a ratio based. There's no grandfathering. There's no stacking of rewards on top of the other. And let's say even if you, as the whale, split your tokens over multiple wallets, you still have to maintain a ratio. So the ratio is actually, from a gas efficiency perspective, it makes sense to have it on one wallet, because it's not like you're optimizing, you're actually creating a bunch of smaller suboptimal accounts, right?
Of course.
So because it's ratio based, it maintains the same kind of fair market dynamic.
There's some very interesting gamification mechanics that you guys are doing. It tells me that people are recognizing real problems in the market, like you guys are, with liquidity mining and with the systems that we have now, and coming up with really innovative solutions to making it work better.
Yeah. So definitely. I mean, the thing is, like, I think we sketched out like all of the dynamics in May, and they've been coded up for a while. It's just waiting to release them. And then on the other side, like this power token can be delegated to different modules. So one of the modules is governance, right? And actually, you can delegate your power to someone else. So if we go on the IPOR DAO side, let's imagine that you are very active in governments, but you don't have tokens, right?
Right.
Well, if you're active in the governance, maybe you get a whale who's not active in governance to delegate their stake to you because you're the one who's tuned in. So the
Right.
largest whale may delegate to someone who actually has 0 tokens, but is acting on their behalf. And maybe there's some reward mechanism around there because this person who is active, let's say on the big brain side, getting in, digging in, and actually making these decisions that will guide the protocol, the whale says, I want this person, taking
I
my
don't have time
governance
for
stake
this.
because I trust them.
Yeah.
Right. So
Right.
you have these kind of dynamics that are focused on these decentralized markets, this kind of not necessarily flat structure, but open markets. Right. So
Right.
you can see it kind of on the token on the liquidity mining side, how we've designed it to have more of a fair market dynamic. And then on the governance side, you have this modular, adaptable, and side that's really focused on building an informed community, an active community, and really encouraging stakeholders of all experiences. And so
Yeah.
that's one thing that we're really looking forward to. Again, we're really proud of the Discord activity so far, and we think that it's actually probably going to boom after this. So we're getting
Yeah. That's
our
awesome.
fingers ready to stay active there.
Well, I think there's some really interesting things there on that governance side of things. Look, I mean, you're also addressing one of the most significant problems in DAO management, right? Is lack of participation,
Yeah,
um, and or participation by people that are ill-informed. And on the other side of that, you have kind of this model of no delegation versus forced delegation, or primarily a delegated perspective. You guys are taking it from the perspective of real flexibility,
yeah,
with incentives potentially being built in, so people that are deep divers into the system can earn from being responsible and taking part in it, whereas people who don't have time to deal with it but love what's being built can provide trust to someone to help make those decisions for them, without having to spend all day long in the IPOR Discord trying to keep up with what's going on, right? And I think that addresses a number of problems in the DAO governance space that I'm actually pretty excited by to hear what you guys are doing in that regard.
yeah. I mean, in our Discord, again, we have that 16,000 members, and we have a couple hundred
Nice,
citizens of IPOR who have reached a certain level through the Crew 3 program. And again, this is meant for self-education. And these, the people that have gone through the hoops, they self-educate and then they help educate others. And then we have kind of this top level of exclusive IPOrians. So IPOrians they're only nominated by other IPOrians and they're selected by IPOrians. It's kind of like this select
nice,
crew that has proved themselves, in terms of knowledge, in terms of time, in terms of serving the community. And these guys are really, really actively, like managing the community, creating it, building it. And this is really the core, of what's starting to form around the IPOR DAO. And also, we've been collaborating with another DAO called Deus Ex, and these guys started
sure,
as consultants to IPOR Labs, right? And they started on the side of really working around the messaging, making sure everything was on point, getting through the community and the comms, and are now transitioning to helping structure this DAO. So this will be a very collaborative process, and it's growing day by day. And you can imagine different protocols like, let's talk about the power of the governance in the IPOR. If you're a credit market that wants to be included in the IPOR index, you're going to want to actually acquire some say in governance. You're going to want to be active in the DAO. You're going to want to put forth your case of why you think this interest rate model is the best. You're going to want to
right,
actually have some say over whether this chain is considered for ingesting different rates. What are the levels of liquidity that you need to attain to get included in the IPOR? So all of these things are kind of interesting dynamics on the governance side. And my long-term view is that the governance around the IPOR protocol is one of the most interesting things, and maybe one of the best fits of decentralized governance out of any protocol.
so I'm actually really excited to take a deeper dive into the way you guys are structuring this, because it sounds really cool. I love this idea. I love the tiered involvement in the protocol. I think it's another thing that happens in the space is that you have communities with hardcore people, those hardcore people, they pick up the scraps of work here and there, or they take on a project because the DAO helps them. But you don't end up with kind of a leadership structure because everyone wants to try to keep it flat. But
Yeah,
with the way you're doing this is it doesn't require it to be a hierarchy. It just recognizes that people are contributing more at a given level, and they may have more knowledge, may have more insight, may understand how things work better, and can provide value all the way down to everybody else that's participating. That's very
exactly.
cool. Yeah, I love that. That's a really interesting model.
And even inside the DAO, you have different badges like liquidity providers or traders for people that have done different actions. And then these will form like subcommittees, right? So for example, about the index, it requires kind of a different subset of knowledge than on the trading side. On the trading side, you're looking at kind
Sure.
of the risk management side. On the engineering side, you're thinking more from the data propagation, or like how do you sync rates between disparate chains and different block tempos, for example. And
Right.
then you have the quant side, which is much more on the academic and on the the risk management from the modeling side. And this is a completely other discipline. So each of these have different badges inside the DAO, and those will eventually be branched out into different, like, let's say, call them subcommittees, because the IPOR protocol, it's not like anyone's going to be an expert of one thing, right?
Right.
Like
Right.
my main
There's too much
job
there.
right now is just asking, inside of our IPOR labs, we have the specialists, at the top of every sector, whether it be tokenomics, quant modeling, engineering, on the smart contract level, on the infrastructure level, on the front end level, on the product design itself, on the marketing. So it really starts to potentially self-organize in a very beautiful way. We've set some skeleton structure on how to do that, and then right now the DAO and the community is really trying to put the meat on the bones.
Some really innovative approaches here. I don't think you've covered it. You mentioned that there's something that's going to happen between today's recording and the release of the podcast. Do you want to talk about that a little bit?
Oh yeah, so I mean, this is really one is the announcement of the retroactive rewards, and then that will
Nice.
also signal, let's say, the launch of the markets. So this will be the first time the
Ah,
IPO token is trading. And
nice.
so that will be an interesting time. The IPOR token price, of course, is directly related to the liquidity mining. So you'll see maybe this fair market dynamic emerge, where like this optimized boost is also related to the TVL, which has this this kind of real yield component. Right now, I think the LP pools, the USDT pool, is yielding about 10% per annum over its lifetime, and month over
Wow.
month. USDC around 8% over the lifetime, and about 6% this month, and
Nice.
DAI around 7% and 5% this month, I think. And so you'll have all of these kind of real yield dynamics, and then this is without liquidity mining, right? And so you'll
Right.
see kind of take place. You'll see people shuffle their power tokens, so you can delegate your power between the different pools. Or let's say you're only providing on one, you'll delegate all your power towards this one pool. So we'll see the fair market dynamics kind of come alive. And then actually the biggest part, that I just kind of already mentioned, is the DAO structure is starting to form, right? So the reason
Right.
that we call this like the first step towards the DAO, distributing tokens is just creating new DAO members, right? So
Right.
this is exciting because people will start to feel some different kind of a relationship with the protocol. They can start exercising their right with tokens, and then that leads to the next side, which is a much longer work stream, which is structuring the DAO, one from a design perspective, and then two, coding it up. And that's actually going to
Yeah.
be a
Yeah.
work in process.
Well, and look, I think the cool thing for participation too, beyond that, is because of what you're building, the number of different potential products and partners for this system are going to provide for a lot of areas of specialization and knowledge that I think is going to attract a lot of really smart people that either want to learn about these things or already have a background or knowledge in particular areas. So I think that's really interesting as well. I'll put this in the show notes, but the website is IPOR.io. But
Yeah.
it'll be in the show notes for everybody. But I appreciate that. So I ask everybody that comes on the show, I ask them this question, and that is, what person people or project in the DeFi ecosystem have you been most inspired by, impressed by, or that you think is just absolutely critical to where we're headed with this whole experiment?
Oh man, this is hard. This is a very loaded question, and to be
Yeah.
honest, I have my head in the sand a bit. I rely a lot on my co-founder and actually the IPOR intern to catch me up on a lot of protocols. So I'll go the easy way out because of its actually a long history. I would say Bitcoin, right? It's
Okay.
really the technology that laid the egg for all of this innovation.
Yeah.
Let's say it's kind of slow, it's kind of boring, and it's doing exactly what it was set out to do, right? It's
Right.
really interesting to see how these dynamics play over years, right? Because
Yeah. Yeah.
the first time I got involved with these markets, we were shooting from $3 to $30 and all the way back down to 2.5, right?
Right.
And that was really exciting. It was cool, but then the idea of transforming essentially energy into computation, into some value, and then building this structure around it laid the egg. I remember the first time I was studying it, I had no idea what I was reading, but I was very interested in the most interesting thing actually to me at that time was essentially the difficulty adjustment mechanism, right? How
Right.
this it can adjust, more miners harder, and then you get less rewards in case they
Right.
drop
Right.
off. So this kind of really cool, I was thinking like how
The
crazy of a
incentive
person you
mechanism.
need to be to be able to design these things so simply, so elegantly, like
Yeah.
you're essentially translating the proof of work and the emission.
Yeah.
You're replicating, let's say, the cost structure and the difficulty of going to mine physical gold, from
Yeah.
a computation perspective. Like it's crazy. It's hypothetical, it's experimental. Up until now, it's been pretty good. If you look out on the log curve, you have let's say, much much smoother structure, and
Yep.
it's working for now. So thank Satoshi, whoever they are. The greatest thing about Bitcoin and Satoshi is that no one knows definitively who Satoshi is, and it doesn't matter, and
Yep.
the network goes on.
Doesn't matter. That's the
So
beauty of it. No, I think that's a fantastic answer, man. And nobody's given that ever. So that's even people in the Bitcoin DeFi space haven't given that answer.
yeah, that's my favorite. Satoshi walked
That's
away,
good.
and it doesn't matter.
That's very good. Well, listen, Darren, I'm really excited about what you guys are doing. I'm going to take a deeper dive on it. We'll be talking about it on our lunch show as well. But really, really, thank you for coming on, and thank you for what you're out there building. So I look forward to following the progress.
Okay, thank you very much, Brad.
Sure thing, man.